Bitcoin in a second-day slump and big news out of Tether. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. Congratulations.
Good morning.
Congratulations on the promotions.
Thank you. Thank you very much.
Long-time CoinDeskers.
My mom is proud.
Your dad is proud too, Emily, I imagine. All right. Well, let's get started. Bitcoin prices slumping to a 12-day low earlier, extending Monday's double-digit fall from record highs. But now Bitcoin is rebounding partly because of Tether. More on that in a moment. The XBX Bitcoin price trading right now at just under $49,000, and the ETX Ether price trading right now at $15.55, according to trade block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. And now we go to our breaking news. Crypto exchange Bitfinex and stablecoin issuer Tether have reached an $18.5 million settlement with the New York Attorney General's office. Bitfinex and Tether have admitted no wrongdoing and will provide reports on the reserve composition of stablecoin USDT, also known as Tether, for 2 years. This resolves a 22-month inquiry into whether the crypto firm sought to cover up a loss of $850 million in customer and corporate funds. And joining us now to discuss is CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Welcome, Nick. Nick is also the editor of CoinDesk's The State of Crypto newsletter. Welcome to the show, Nick.
Hey, good morning.
All right, this is huge news. Tell us a breakdown of what's going on with Tether and Bitfinex. Seems like a slap on the wrist.
Yeah, it's I think hard to read this as anything other than a clear victory for Bitfinex and Tether. The trial began 22 months ago in April 2019, and at the time, the New York Attorney General's office alleged that they covered up the loss of $850 million in corporate and customer funds by borrowing from Tether's reserves. Now they're saying that Tether will provide quarterly breakdowns of its reserves and what's backing them, cash and cash equivalents over the next 2 years. It's going to the New York Attorney General's office will assess the $18.5 million fee, but they're not going to bring any charges. So, as far as this case goes, it does seem like Bitfinex and Tether are coming out, unscathed on the other side of this.
So what do you think are the wider implications for the industry? I mean, the industry has been really very nervous about this for a long time. What do you see as the wider impact?
So it's kind of twofold, right? I think on the one hand, it is a reassurance almost to folks who are concerned that Tether is unbacked. Now, in the settlement, the New York Attorney General's office does say that there were times when the issued USDT in circulation was not fully backed, but now they're saying is, or at least they're saying, hey, we're looking at this, we're going to be monitoring. We're almost as if they're acting as an auditor. On the other hand, it's not like this, these allegations that Bitfinex lost $850 million really harmed its business. Tether's issuance went from $2 billion at the time the probe started to, I think it's around $34 billion right now. So the market, for the most part, kind of, I don't want to say shrugged it off, but it's not like this was a huge, issue for much of the market.
Nick, what are these quarterly reports that they have to put out and that the AG has asked them to do? What do we know what the contents need to be?
So according to the settlement, it's going to be, quote, substantially similar to whatever documents were turned over during the probe, and it will basically lay out what's backing the Tether that the USDT that Tether has issued. It'll have, how much is cash, how much is cash equivalents. Beyond that, there's not a lot of information, so it's unclear whether this is going to look like, an attestation or an audit, or if it's going to be some other form of, maybe a third-party, law firm will be providing it. That is still a little unclear right now.
Just one more question. The other cases that are going on right now, are those resolved as well, or the other cases involving Tether?
So There is a civil class action lawsuit that I believe is still ongoing. That one I imagine is just going to take its time. There were rumors in 2018 and 2019 that the DOJ and CFTC were investigating, and there hasn't been any news out of either of those since in at least 2 years. So it's really unclear whether anything's going to happen. Given that we have gone 2 years without hearing anything. Yeah, sure. It's possible that we might hear something, but it's been a while.
Thank you so much, Nick, for joining us and giving us your breaking news update.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And our next guest heads Paxos, a company that builds infrastructure to bridge the movement between physical and digital assets, including stablecoins as a service. Joining us now is Paxos CEO Charles Cascarilla in New York. Welcome, Charles.
Thanks for having me.
So, Charles, we just had this huge news drop out of Tether and Bitfinex. They have come to a settlement with the New York Attorney General's office, $18.5 million, down from the $850 million probe initially. Sounds like they got off pretty well. What's your reaction?
Well, I mean, clearly one of the big concerns for the space in recent times has been, is Tether fully backed? At times it was clear that it wasn't fully backed. I think that it's a critical piece of infrastructure for the space. And, when you look at the price action that we've seen in these assets, a lot of the narrative has been perhaps Tether is actually driving the price action, not real money buying it. And I think we can put that to bed now. We can say that the reality is there's a lot of fundamental enthusiasm for the space, and this isn't just something that is being levitated because someone is creating an unbacked stablecoin. So I think that's generally a really positive thing for the space.
So just looking at kind of your business in particular, because you are also involved with stablecoins, what does this mean? What does this mean for the stablecoin business? What does this mean for just the rise of USDT around the world? Because Tether is quite dominant in many parts of the world, particularly in Asia. So what do you think this means going forward?
Well, it's primarily been a product that's been used by the crypto early adopters and by retail players outside the United States. And so I don't think this, for instance, is going to create a move towards mainstream adoption of Tether. But on the other hand, I think that this definitely is positive for the crypto space and crypto users, and certainly a lot of people who depend upon Tether to be stable. Now, we'll have to see the full report and understand exactly what they're going to audit. At times it hasn't been fully backed by US dollars. And I think that doesn't mean that there isn't a place for instance, other stable coins. I think what's unique about what we do at Paxos is we're trying to create infrastructure that is specifically meant for mainstream adoption. So our stable coins are our primary regulator. We are ourselves regulated, but also the stable coin is regulated. We have our own stable coin. We have white label stable coins like Binance. We also support the HUSD product as well. So there's a whole number of products out here in the stablecoin space because it's still very early. And ultimately, I believe whether it's dollars or gold or anything, most of the assets of the world are going to end up on a blockchain and be moving around on a blockchain. And probably the primary asset at the moment to make that switch is dollars. And it's specifically because of what you said. There's people who need to be able to have access to dollars around the world. And so, I think you can look back, no matter what, say this is really positive for the crypto space.
Charles, you're not just involved with stable coins. You also have an institutional exchange, ItBit. So tell us a little bit about that and how such a decision or how such a settlement affects that business.
Well, there's just, again, been so much uncertainty over time in the space, regulatory uncertainty. And we've worked our best as Paxos because we really think of it as our value proposition to our customers to create a highly regulated and therefore trustworthy infrastructure provider so that when you go from early adopter to mainstream, there is a player there who can enable that for large, sophisticated institutions. ones that themselves are highly regulated. And so, that doesn't mean that this is the right product set for everybody. There are so many different ways to be able to engage in the crypto ecosystem, and that's what makes it so exciting. On the other hand, I think being able to change fundamentally the financial system is going to be something that requires mainstream adoption and a replatforming of so many different players to be able to access this ecosystem. And so that's what we've been working on. Our exchange is an institutional exchange. It's really for B2B2B and B2B2C customers. It's not really optimized for retail, but that's because our goal here is to be an infrastructure provider, not to be someone who's acquiring retail customers in its own right. We want to power providers that have millions, and in some cases billions, of retail customers.
So a good example of that would probably be PayPal, which was one of the most important things to happen in the Bitcoin world over the past couple of years. Basically PayPal's allowing for cryptocurrency is widely seen as sparking this current bull run. Can you just tell us a little bit about how that's going? I mean, are people really using PayPal to buy cryptocurrency? Who are they? Are they new users coming in? I just wondering if you had any details on how that's been going so far.
Yeah, well, certainly the idea that now anybody, and I think PayPal's just launched in the U.S. at the moment. They have plans to scale and grow outside the United States. But the idea that anybody at PayPal can go out and be able to buy crypto for the first time. No, I'm not muted. Can you hear me?
We can hear you,
yes.
Charles.
Yes.
Yes. I think there's been some crossover.
Oh, okay, I'm sorry.
But
Anyways,
Charles, are you having trouble? Are you having trouble keeping up with the demand? Are you keeping clients happy? With the surge in workload and the processing and the tech demands you might be seeing?
Well, I mean, clearly, someone like PayPal is a game changer for the space. You now have hundreds of millions of people who can access crypto who haven't been able to access it before. And so what our value proposition is for PayPal and for any firm is that we're acting as the infrastructure that allows them to feel really confident that they're going to be able to have an always-on reliable experience. And so we've built scalability, we've built throughput, we've built the capacity to manage for these really large institutions that are coming into the space. And they're obviously the largest one so far. There's going to be a number of others that come in, I think, that are going to be of similar scale, either other payment companies, other financial services companies, banks and brokers. And that's part of the space growing up, and that's what Paxos is here to provide. And so you're clearly seeing new people accessing it that just couldn't before or weren't aware of it because it was just a little bit more cumbersome to go open a new account somewhere than use one that's already on your phone.
So speaking
Do
of,
we have evidence that that's happening? That people are using PayPal that way? That PayPal is leading to more mainstream adoption of cryptocurrency. Do we actually have data on that?
Well, certainly, I think I would let PayPal talk about their customer base, but I can tell you that they've been really clear that this is changing their business, their engagement. They have 2 times more engagement with their customers as a result of putting this into their app. And so that's, I think, a really clear sign that this is changing the level of adoption in society in general. And so I don't think they've been specific about the numbers, and I think that they'll talk about that when they can. But it's obvious when you look at other players like Square or Robinhood or Revolut, SoFi, et cetera, that this is really changing the engagement that they're getting with their customers. And I think PayPal's been pretty clear they're seeing that as well. So I think that it's hard to always drive back and look at why is this price action doing what it's doing. Ultimately, everyone's like, well, why is the price going up so much? And I think the reality is it's because not just PayPal, as great as it's been to have them in there, but now you're getting people like Elon Musk talking about buying it in the corporate treasury. I don't think anyone would have expected that you would now have corporate treasuries buying Bitcoin. I think we would have thought, yes, you'd see more players like PayPal coming in. I don't know if anyone said we would have seen more players like Tesla coming in. And so that's just a complete shift for at least from my vantage point of the space. And a lot of it is PayPal and other players, but a lot of it's just other things that we hadn't even expected.
So speaking of retail customers, you guys are working now dealing with settlement issues with Credit Suisse and SocGen. But are you working with the likes of DTCC or Robinhood to deal with settlement issues? And can public blockchain really deal with the load of so many transactions, the issues that we saw over the past few weeks with GameStop? Or are there any technical hurdles that still have to be overcome for that to actually come to fruition?
Yeah, well, I think firstly, the GameStop issue really highlighted how blockchain infrastructure can help solve a lot of the problems in our markets. Ultimately, a blockchain allows you to know who owns what when. And you actually don't know that in today's financial markets. And there's a lot of legacy reasons why that's the case. They were probably good reasons 50 years ago. They're not great reasons today. And so I think that there are some real shifts that are possible. And that's certainly what we believe, because we're doing this. We're tokenizing U.S. equities and settling them with Credit Suisse, SocGen, Nomura Instinet. There are others that are joining on. Clearly, this is really timely issue that a lot of firms are now starting to think about, because it's creating real drag on their businesses, real risks to their business to have lengthened settlement cycles. And I don't know if a public blockchain can handle the level of infrastructure that is needed, for instance, in public U.S. equity markets today. I think that will be the case in the future. But for instance, to be able to have to handle 500 million transactions, which is how many settlements happened on some of those really high volume days, that is going to be something that you can't put through, for instance, the Ethereum blockchain, which is the most used. You already see gas fees and throughput problems. So that doesn't mean that it can't happen in the future, but it couldn't happen today. So you really need to think about architecting things differently.
So are you talking to Robinhood, though? Or are you talking to DTCC?
Well, we have a full DTC participant account. We're going to be submitting our clearing agency application, hopefully in very short order. That will make us the third clearing agency in the United States, aside from the DTCC and the Options Clearing Corp. So we are really committed to being infrastructure in a similar way to the DTCC.
So if you had to guess, who do you think would be the next big player to come in and shake up the cryptocurrency world? We saw PayPal and then we saw Tesla. Just wondering if you have any thoughts about who we might want to be looking at for the possible next big entry.
Well, I mean, there are a number of firms that have billions of customers, and you could imagine that if any of them decided to come into the space, that would be, really enormous. And, that would be certain technology companies. They have wallets. That could be some of the large banks. You could imagine, you have any large bank or broker now be able to offer this. So, and I know they're all considering it. We hear about it constantly. We saw the news about Pony last week. I think it's really clear everyone's taking this very seriously. They're looking at it very hard. They realize that this is a great way to drive engagement. This is a new asset class that is here to stay, and you can't not be there. And so the question is, do you want to lead or not? And a lot of people are looking at this and saying, it's time for us to get in and be a leader. And PayPal did that, and it's blazed some trails that I know others are really strongly considering. So it's hard to know who the next one's going to be, because I think so many people, so many different firms are considering this at the highest levels.
Charles, just one last question, and I just want to go back to this Tether news. A lot of critics of Tether and Bitfinex have accused the companies of printing tethers to pump up the price of Bitcoin. I wonder, do you think this decision will calm and quell those accusations now? Can we have more confidence in stablecoins run by Tether and Bitfinex?
Well, I think we can have some more confidence because of this. At the end of the day, stablecoins come in different shapes and sizes, so to speak. And so in the case of Tether, it is still unregulated. It's unaudited. That always is going to create some concerns. Unregulated, unaudited, and to some extent unbacked. It's not fully backed by dollars. There's other things that can back it. That's what the terms and conditions say. So I'm not speculating here. And so that's going to be different from, say, for instance, a Paxos stablecoin. That's regulated, that's backed, that's audited on a regular basis with lots of oversight. And so, that doesn't mean that Tether is a source of systemic risk per se, But it does come down to what you want a product to look like if you're going to start to scale and use that product as your infrastructure on a very wide basis outside of what I would call the crypto early adopter ecosystem. And that's ultimately what you have to be thinking, because you want a tokenized dollar, not just for crypto trading, but for large settlements, for movements cross-border, for the ability to spend it on goods and services, businesses and payment processors. How is that going to look in the future? Let's have a big viewpoint about how the system can change and really think about what that's going to require from the infrastructure to be able to accommodate that. And so I think we really approach this in that vein, and that doesn't necessarily preclude there being other products there that customers can use.
Thank you, Charles. I have a feeling the critics of Tether, though, will not be appeased by this decision, but thank you for your weighing in.
Thanks for having me.
All right, that was Paxos CEO Charles Cascarella in New York. Coming up, we'll head over to Germany for some BTC markets analysis with Finoa co-founder Heinrich Gebing. Welcome back. Checking in on Bitcoin. The XBX Bitcoin price now trading at $48,757. It's down just about over 2% over the past 24 hours. And the ETX Ether price trading at right now, 1560, also down just over 4% over the past 24 hours, according to Trade Block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. We are seeing certainly a bounce in the prices from that Tether announcement, and Federal Reserve Chairman Jerome Powell is expected to tell Congress later this morning that the central bank is committed to keeping interest rates low. The U.S. central bank is also likely to continue with its liquidity-boosting bond purchase program, despite a recent rise in inflation expectations and an improving growth outlook. Joining us now to discuss the crypto markets from Berlin is Heinrich Gebing, co-CEO and co-founder of Finoa, a crypto asset platform for institutional investors. Welcome, Heinrich.
Hello, welcome. Thanks for having me.
Great to have you here. So, Heinrich, I just want your reaction to this modest bounce we're seeing now after this Tether announcement. And as central banks around the world subscribe to expansionary monetary policy, we're expecting the Fed to keep interest rates near zero, with Powell's announcement coming up in the next hour or so. Could that possibly push bond yields lower and put a floor under both stocks and Bitcoin?
Well, I mean, any big news on the market probably have a massive effect at the moment. I mean, what we see, luckily, since we saw this market correction yesterday, that we kind of see a plateau right now, where the market, after I guess a healthy correction, kind of tries to find its base again. But certainly interesting to see if any of the Fed's news that's going to get out will have another impact on the market.
Curious, Heinrich, about your perspective on what is the demand in Germany and Europe at large for Bitcoin from retail investors vis-a-vis institutions or corporations?
Well, as we as Finoa focus on institutional investors, we see over the last, let's say, 6 to 12 months, a tremendous growth when it comes to institutional demand for crypto assets. And we see that all across Europe. I mean, what we especially see in Germany, and you mentioned it, we are based here in Berlin, we see that a lot of companies from the DAX 30, which is basically the S&P 500 here in Germany, start looking at the market, but not only looking, but actually start investing into the market and kind of hold their first allocations in their treasuries, or start divesting or diversifying their portfolio into crypto assets. And I think that's a huge step. And when you look a little bit at the history, Europe is always lagging a little bit behind a few years between the development that we see in the US. So it's very important that we see the same steps now happening in Europe as well, which will help the overall European market tremendously going forward.
One of the interesting tensions in Europe is this tension between sort of the GDPR and the right to be forgotten and blockchain technology, which is kind of the opposite of that, right? Like blockchain technology is the idea that you can keep something on a blockchain potentially forever and it can never be forgotten and it can never be deleted. How does Europe square that problem? I mean, how do you solve that contradiction?
That's a very good point. I mean, GDPR obviously is a tremendously important privacy mechanism that we hear in Europe, but it comes with a lot of burdens for all market participants. But that's not particular only for blockchain and crypto, but we see it in all industries, right? And also between European and US companies, we see a lot of, let's say, friction in that sense, how to deal with GDPR. I mean, blockchain provides pseudo-anonymity, right? So we are not, let's say, exchanging actual user data on chain. So I think GDPR doesn't really play so much into this so far. But what we see is that the European regulators very much move into the crypto asset regulation, which is actually pretty progressive when we look in a global scale. And for example, Germany went so far that last year in 2020, they declared crypto assets as financial instruments under the German Banking Act. That was a globally absolutely progressive regulation, a very, let's say, for a traditional regulator, as we see the German regulator, a very innovative step, and it gave a lot of certainty to players in the market. So I overall see an absolute will from the regulatory side to deal with crypto assets. They accept that this new asset class is here to stay, and they try to find the boundaries that kind of fit to the traditional regulatory system as well to put crypto assets under a regulatory roof.
Getting back to the institutions, how are they approaching DeFi? Are they even paying attention to it at all? And how does their interest compare to, let's say, retail investors in Europe?
So absolutely interested. I mean, no one can really hide from this tremendous growth that we see in the DeFi ecosystem. And with the low interest rates and, for example, in Europe, banks charging negative interest rates on cash deposits, every institutional investor is starting to look into new yield-generating opportunities. And DeFi is certainly a space. I think one thing that we see is with the growth of services providers, as we are at Finoa, and that are regulated, that are trusted, that serve large reference customers, we see more and more interest, and it becomes kind of like a herd activity that DeFi and crypto in general become more and more of interest. For Finoa, for example, we see a lot of interest in our staking products. So we provide a lot of proof of stake protocol custody, and then also allow the participants to participate in the staking mechanism, right? Which is not only a very important mechanism for the chain itself to provide stability, validate transactions, but it's also a yield generating mechanism for the investor itself. And we see tremendous interest on our products, which come from very traditional institutions.
Great. Thank you so much, Henrik, for your insights across the pond.
Thanks for having me.
All right, that was Henrik Gembing, co-CEO and co-founder of Finoa in Berlin. Meanwhile, as cryptocurrencies rise in popularity, central banks are playing catch-up to develop digital currencies of their own. Joining us to discuss from London is John Velisarios, central bank digital currency lead at Accenture. Welcome, John.
Thank you for having me.
Great to have you, John. So you have a hand at working with central banks around the world to develop CBDCs, central bank digital currencies, including work with Riksbank, Sweden's central bank, and most recently South Africa's central bank. What kind of underlying architecture are you looking at, and what kind of policy and regulatory implications are you discussing?
Very good question. In terms of underlying technologies, these are primarily permissioned distributed ledger technologies that are used to allow sort of the central bank to be in full control of the money that is issued, or the currency that is issued, the CBDC is issued to commercial banks and then subsequently down to consumers. And fundamentally, these are permissioned DLT type platforms that allow them to be able to sort of issue those and control them in a way that that is aligned to the central bank's policies and regulatory sort of framework that they're under. The projects that we're working on to date are still in the pilot phase, and sort of these are precursors to production implementations and so on. Very important to state that. And these are the foundational sort of foundation stones of these engagements for being able to launch a CBDC into the wider economy. We also are working on projects in France, for instance, with Banque de France, on the wholesale applications as well. So those are the kind of technologies.
John,
Policy and regulatory frameworks are part of the project work that we do, and give us, we end up looking at sort of it together with, obviously with the central banks, and any aspect of that is part of the overall engagement.
John, I wonder how you're tackling privacy concerns, making sure that governments aren't surveilling their citizens and their financial transactions.
Yeah, that's a good question. We have we've done a couple of engagements in this area as well with the ECB. It's a public document as well. You can see that around privacy and anonymity of retail CBDC transactions. And that's in some cases it's a very critical requirement to be able to ensure that you don't have full visibility of everybody's spending and everything that's going on in the economy. And that's also part of the underlying technology that is also selected for these implementations. So we try to preserve in all cases sort of the existing relationships that consumers have with their banks, and not and such a way that not everybody can see everything that's going on in the wider market. Of course, that's a very important part of it. And there are ways that you can configure them so that to provide the maximum amount of privacy and confidentiality of these transactions at all times. Of course, that these are digital transactions. They are, of course, you do have a record of them having taken place, and there are wallets, of course, where the tokens are stored, and so on. But at the same time, we try to maximize the amount of privacy as well as part of that.
Is China's central bank digital currency going to shake up the global financial system as much as some people think? And what is going to be the actual tangible impact on this, for example, on the United States?
Yeah, I mean, China definitely made an impact, I think, for the wider central bank community as well, because of what they launched last year. And I think it's something that they've taken into a huge amount of consideration, given the potential impact in China's role in the global sort of economy, as well as the internationalization of the currency and what the implications of that could be for other reserve currencies in the world. So there are definitely both, I guess, China and other initiatives have created that impact that sort of acted as an accelerant for these CBDC projects since last year. So I think in terms of impact, it's difficult to say at this point because we don't know all the the wide scale sort of implications of this initiative. But at the same time, there is a lot of interest, and the market is looking at it very carefully in terms of the adoption and the rollout. It definitely has the scale and the potential for a wider impact, especially for countries that trade with China as well.
John, getting back to the question about the back end, are you guys working with any let's say stablecoin providers, the Paxos of the world? Who's helping you guys build out CBDC infrastructure, or is it just Accenture? Or are you just developing it yourself?
Well, we work with, I mean, we're not a technology, we're not a product company, right? So we work with a lot of technology companies and product companies to build these solutions in the marketplace. We have not really worked very much with stablecoin sort of providers. We are implementing solutions on behalf of our clients based on their key requirements that they have. And what we do is we work with technology vendors as well as the client's requirements to put together these solutions and take them to market with the client.
Thank you so much, John, for joining us. Great perspective on CBDC development.
Thank you.
All right, that was John Valisarios, Accenture's central bank digital currency lead in London. That's it for First Mover. Coming up, tomorrow's special guest, Albert Faulkner, the commissioner at the Wyoming Division of Banking. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.